Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the morning Forex technical report where I take a look at some of the major currency pairs from a technical perspective. So let's get started. We'll start by taking a look at the euro versus US dollar. And what we see in the euro versus US dollar today is a break below these swing lows through here. We had swing lows, swing lows, swing lows, swing lows, swing lows, swing lows, swing lows. Trading yesterday, and the market moved up yesterday, got close to our 100-hour moving average. But what did we see into the close? We saw selling. Why? Because we had some Fed officials yesterday, in particular Loretta Mester and Fed's Bullard, who spoke a little bit more hawkishly about things like 50 basis point hike at the next meeting, and that has got the market interested and started to see more dollar buying as we approach the 100-hour moving average. Recall from yesterday's trade as well, we came up to the 200-hour moving average and found willing sellers against that level. So the price needed to get above both the 100 and 200-hour moving average to increase the bullish bias. It couldn't do that. We found the sellers early against that level and moved to the downside, and that sort of set up today's trading day, getting below this swing area, correcting up into it in the midday, but then fell back below, trading down to 1.0612. On the downside, we are currently trading 1.06439. But what traders will be watching is this swing area right here between 106.53 and 106.65. As long as the price can remain below that level, come into here, the bias remains to the downside for further downside. If we do move above that level, we could see more short covering into the weekend, leading up potentially toward the 100 and 200-hour moving average. But it would take a move above those two moving averages to increase the bullish bias for this currency pair. So be aware, be prepared, but the sellers remain in control in the euro versus US dollar. Taking a look at the daily chart, we did reach the high of a swing area through here. The swing area comes between 105.73 and 106.15. As you can see, the price moved just into that level and started to bounce. So perhaps there's a reason for support buyers against that level, or at least some profit taking into the weekend. So be aware of that level as well. If we move below the 105.73.4, we should see further selling with 104.50 as or 60 as a 38.2% retracement. That is near this low price that we saw in January as well. That level comes in at 104.80, 104.80, 104.60. Those are our next two targets. If we're able to break below 105.73, that's down the road, but keep that in mind from a bigger perspective in the euro versus US dollar. Let's take a look at the dollar versus yen, and on the 4-hour chart here, we see that the price moved above this trend line, this top side trend line, connecting highs here, 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 and here. We did move above it, and I guess that would be late trading yesterday, early trading here today. This is a 4-hour chart, mind you. So and the price also moved above the swing area through here, where we had a number of different swing lows right here, forming a floor. Broke below that level, retraced up into that area, and found sellers again. Fell lower, came back up, and found sellers again, and then rotated to the downside. So returned back to that level after all these tests through here between 134.49 and 134.76. Got above that level, couldn't stay above it, started to rotate back. We are back into that area. Watch the 134.49. If the price can get below that level, that could lead into more corrective pressure into the weekend as some profit taking comes into play on the failed break of this topside trend line and the failed break of this swing area through here. So be aware and be prepared for that. Let's take a look at the sterling versus US dollar. And for that currency pair, we fell below the 200-day moving average. Recall going back to last week's trading, the market came down to that 200-hour moving average, found support buyers, and rotated back to the upside. We saw that upside stall in trading this week against this swing area right through here. You can see all the levels through here where the market was a floor and then became a ceiling right here before moving to the downside. So returned to that level, found willing sellers, and pushed the price down to the downside, fell below the 100 and 200-hour moving average. And trading yesterday, we saw sellers lean against the 200-hour moving average and take the price to the downside, and that moved to the downside, moved below this swing area, and we closed below that level, which is good news after testing, I guess, on the rebound right through here, this level right through here, here we had a low here, and then we found the sellers against this level right here, and moved lower into the close. Anyway, we saw the momentum to the downside take the price below the 200-day moving average right here, but we stalled ahead of this blue line right here, which is the 100-day moving average. The 100-day moving average currently comes in at, I'll get it, at 116.31, and the low price, or 118.32. The price came down to 119.14. Not really close to it, but I guess at 118.91. That's not 31. That's 91. So it got within 14 plus 9, 23 pips of the 100-day moving average and bounced to the upside. We had better retail sales come out of the UK, which gave the pair a boost, and we moved back above swing levels through here and rotating back to the upside. So we're going to be watching the 119.13 level up here, the 120 level up to 120.10, 119.91 level to 120.10. Let's call it 120 for resistance. If the price can hold resistance against that, we'd see a rotation back to the downside. But if we do move above the 120 level, above the 120.10 level, we should see further upside momentum for the sterling versus US dollar. Finally, I want to take a look at two of the Australian and the New Zealand dollar versus the US dollar. We're seeing continued momentum to the downside in trading here today, and that move to the downside got really close to the 200-day moving average. That 200-day moving average comes in at 0.6805. The low price came in at 0.6811, so it got within 6 pips of that, and we're seeing a rebound to the upside here in early New York trading. So key 200-day moving average finds early buyers against that level. Not surprised about that. We're going to be watching the 68.55 level on the top side. That level was this low price going back to early February, and if the price can remain below that level, the bias. This is just a corrective move into what is into resistance, and then a move back down. We'd have to still get below the 200-day moving average on the downside for the Aussie versus US dollar. Finally, take a look at the New Zealand versus US dollar, and and it seems like a mirror of the Aussie versus US dollar in that the price came down and got very close to the 200-day moving average. That 200-day moving average comes in at 0.6186. And the low price got down to 0.6193, so it got within 7 pips of that before rotating back to the upside, similar to what we saw in the Aussie versus US dollar. I would look at yesterday's low as a potential level to find support resistance. If the price moves up to that level and able to stay below that level, we could see a rotation back to the downside and need to get below the 200-day moving average. Just below that is 100-day moving average at 0.61589, so be aware of that. So there you have it. Look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading, and have a great Friday and a better weekend. Bye-bye now.